Hello everyone, welcome to Educare 247. This is the 18th lecture on our special revision series for SEBI Grade A 2020 examinations. In this lecture, we will be discussing the Companies Amendment Act 2020, and this video is the second part of the amendment discussion. We have already discussed certain amendments in part 1 of the video. You can please go through the part 1 first before starting with the part 2 of this video. So let's start. Okay, so in our previous video, we have discussed amendment regarding chapter 1, 3 and 4, right? So in this video, we'll start with the amendment of chapter 8, which is the first amendment in chapter 8 is regarding section 124, which is your unpaid dividend account. So amendment here is regarding the penalty provisions applicable to this section. Now before amendment, if a company fails to comply with any requirement of this section, the company shall be punishable with fine of 5 lakh rupees, which may extend to 25 lakh rupees, and every officer of the company who is in default shall be punishable with fine of 1 lakh rupees, which may extend to 5 lakh rupees. Now, after amendment, the penalty for the company has been changed to 1 lakh rupees, and in case of continuing failure, with a further penalty of 500 rupees for each day, subject to a maximum 10 lakh rupees. And for every officer in default, the penalty has been changed to 20,000 rupees, and in case of continuing failure, with a further penalty of 100 rupees for each day during which the failure continues, subject to maximum 2 lakh. So as you can see here, from 20 lakhs, the penalty has been reduced to 10 lakhs for company, right? And for officer in default, from maximum penalty of 5 lakh, it has been reduced to 2 lakh. So basically here the penalty has been reduced. Now the next amendment is regarding section 128, which is books of accounts to be kept by company. Now again here, penalty for the officer in default has been changed, right? So previously the penalty on managing director, whole-time director in charge of finance, CFO or any other person who has to comply with the provisions of this section. So if they did not comply, then they could be subject to imprisonment for maximum 1 year, fine minimum 50,000, maximum 5 lakhs or both. So now this imprisonment has been removed. So again, in this section also, the Amendment Act has decriminalized this imprisonment provision, right? So now only fine will be applicable to officer in default, and the fine is the same as the previous ones. Now, Educare offers various courses for SEBI Grade A 2020 examinations. We have comprehensive courses for SEBI Grade A 2020, which includes the syllabus of both paper 1 and 2. We also have MCQ courses for SEBI Grade A 2020 paper 2, and we also have SEBI Grade A 2020 crash course for phase 1 and 2. You can apply with coupon code SEBI and avail discounts on comprehensive courses and crash courses. However, since MCQ courses are already at a discounted price, no further discount is available in this course. You can enroll on these various courses on the basis of your preparation stage. Now moving on to next amendment. So now in chapter 9, a new section has been inserted, that is section 129A, which deals with periodical financial results. So after section 129, the following sections shall be inserted and which shall be called 129A. So now let's look at the wordings of the section 129A. Okay, the central government may require such class or classes of unlisted companies as may be prescribed. Number A, to prepare the financial results of the company on such periodical basis in such form as may be prescribed. And second, to obtain approval of the board of directors and complete audit or limited review of such periodical financial statements in such manner as may be prescribed. And C, to file a copy with the registrar within a period of 30 days of completion of the relevant period, which such fees as may be prescribed. So previously these provisions, they were applicable to only listed companies, right? So by section 129A, the government can make these provisions applicable now to certain classes of unlisted companies as well. So what they have to do, they have to prepare financial results on periodic basis, then they have to get those results audited or perform limited review, and they have to file a copy of the audited financial statements with the registrar on periodical basis. Right, so now let's move to the next amendment. So the next amendment is in section 134, which talks about financial statement, board's report, etc. So now in this section also, the amendment is regarding the penalty for contravention of this section, right? So now the penalty before amendment was, for the company it was minimum 50,000 rupees and maximum 25 lakh rupees, and for every officer in default the penalty could be imprisonment, which could extend to 3 years, fine of minimum 50,000 rupees, which could extend to maximum 5 lakhs, or both, right? So now after amendment, the penalty for contravention for company has been fixed to 3 lakh rupees. So now there is no maximum minimum, there is one fixed penalty, that is 3 lakh rupees. And similarly, for every officer in default, the penalty is fixed to 50,000 rupees. So now again, there is no maximum minimum, it is just 50,000 rupees fixed. So as you can see, there is a huge reduction in the amount of penalties from maximum 25 lakhs to just 3 lakhs. And here also from maximum 5 lakhs, they have reduced it to only 50,000 rupees. Okay, so now the next amendment is in section 135, which deals with corporate social responsibility. Now, I hope you all know what corporate social responsibility is. It is also called CSR in short form, right? So this section 135, it requires that all the companies should spend at least 2% of their average net profit in the last 3 years in social activities. So at least 2% money has to be spent in social activities, right? So this is the main provision of section 135. Now through amendment, new insertion have been made in this section. So the new insertion is regarding the set off of excess amount spent in CSR activities. Now what do you mean by set off? Let's say I spent 4% of my net profit this year, right? But I was required to spend only 2%. I spent an excess amount, right? So the next year what I can do is I can set off the extra 2%. So next year now I don't have to spend any money in CSR activities, because I can set off the extra 2% that I spent last year, right? Similarly, if I had spent 3% this year, then I could set off the extra 1% spent in the next year, and the next year I could spend only 1% in CSR activities instead of 2%. So this set off provision has been newly inserted. Previously, such set of provision was not available in this section. So let us read the wording of the section once. Provided also that if a company spends an amount in excess of the requirement provided under this subsection, such company may set off such excess amounts against the requirement to spend under this subsection for such number of succeeding financial years in such manners as may be prescribed. So set of provisions for a number of succeeding financial year, and till how many financial years can you set off the amount spent, that will be notified by the government. Now another insertion has also been made. Let's look at the wording of another insertion as well, right? Where the amount to be spent by a company under subsection 5, means the amount spent in CSR activities, if it does not exceed 50 lakh rupees, the requirement under subsection 1 for constitution of CSR committee, corporate social responsibility committee, shall not be applicable, and the functions of such committee provided under this section shall in such case be discharged by the board of directors. So if the amount to be spent in CSR activities does not exceed 50 lakh rupees, then there is no need to form a CSR committee, right? Previously there was the requirement to form CSR committee. Now for amount not exceeding 50 lakh rupees, there is no requirement, and the function of the CSR committee can be done by the board of directors themselves. So I hope you've understood this. These are easy amendments, right? Now amendment has also been made in section 135. Now that amendment is regarding the penalty for contravention. Now penalty has been completely changed from previous penalty. Let's look at the new penalty now. If a company contravenes the provision of the section, it shall be punishable with lower of twice the amount transferred to unspent CSR account or Schedule 7 or 1 crore. So the maximum amount punishment shall be 1 crore, but if twice the amount is less, then twice the amount shall be the penalty, right? And every officer in default shall be punishable with lower of 1/10 of the amount to be transferred to unspent CSR or Schedule 7 or 2 lakh rupees, whichever is lower. So this is the new penalty for the company and officer in default. Now let's move on to section 137, which is copy of financial statements to be filed with the registrar. Now again here also the change has been made in the penalty provisions. So before amendment, the company which is in default has to pay the fine of lower of 1000 rupees for every day during which the failure continues, subject to maximum 10 lakh rupees, right? And the managing director, CFO and any other director charged by the board, if they are in default, then they shall be punishable with 1 lakh rupees, and in case of continuing failure, with further penalty of 100 rupees for each day, subject to a maximum 5 lakh rupees. Now after the amendment, the company shall be fined with 10,000 rupees, and in case of continuing failure, with further penalty of 100 rupees for each day, subject to a maximum of 2 lakh rupees. So from 10 lakh they have reduced it to 2 lakhs, right? And again the managing director, CFO and any other director charged by the board, then he shall be fined with 10,000 rupees, and in case of continuing failure, with a further penalty of 100 rupees for each day, subject to a maximum of 50,000 rupees. So from 5 lakhs they have reduced it to 50,000 rupees. Now the next amendment is in section 140, which is the removal, resignation of auditor and giving of special notice. Again here the amendment is regarding the penalty provision. Now if the auditor does not comply with above provision, he or it shall be liable to a penalty of 50,000 rupees or an amount equal to remuneration of the auditor, whichever is less. And in case of continuing failure, an additional penalty of 500 rupees for each day of violating, during which the failure continues, subject to a maximum 5 lakh rupees. So this was the penalty provision before amendment. Now after amendment, the change has been made in this 2 lakh rupees. See, previously it was 5 lakhs, so from that they have reduced it to 2 lakh rupees maximum. Other amounts are same as before, right? See, these all are same, only change has been made in 2 lakh, the maximum limit. Now the next amendment is in section 143, which is the powers and duties of auditors and auditing standards. Now before amendment, if any auditor, cost accountant or company secretary in practice do not comply with the provision of this section, he shall be punishable with fine of 1 lakh rupees, which may extend to 25 lakh rupees, right? Now after amendment, if any auditor, cost account or company secretary in practice do not comply with the provision of this section, then he shall, in case of listed company, be liable to a penalty of 5 lakh rupees, and in case of any other company, be liable to a penalty of 1 lakh rupees. So now they have segregated listed and other companies, right? So penalty is different for listed companies. For listed it is maximum 5 lakhs, and for other companies it is 1 lakhs. So let's end our video here. Okay, so the remaining amendment we will discuss in the part 3 of this video. So if you found the video useful, then please like and subscribe the channel, and stay tuned with us for more videos on different topics of SEBI Grade A 2020 examinations. Thank you.